Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
LME 3-month copper. In January, I compiled and published my annual video commentary on LME 3-month copper. Please look at the YouTube index to find that one. In this, I looked back and found a very relevant technical pattern for the action seen since mid-December last year. And that key piece of evidence is recreated here and is on this daily chart and is the bright red 2009 to 2016 bullish shift pitchfork. And the specific key piece is the bright red upper tine, currently at 13,414. That sits a little higher up and has capped, despite being significantly pierced on one occasion, that's capped a number of significant thrusts higher, seen in January, February, March, and now in April 2 weeks ago. It has been a superb resistance during this time. Indeed, this is the key piece of overhead resistance and only piece of resistance here seen since the break upwards at the end of last year and the start of this year. This leaves us with the question, one that I've been pondering for quite a while, of what now? Well, 6 weeks ago I said there were two possibilities, with one of them having a subplot and none of them really satisfactory. The first possibility, and the one the market chose in the end to follow, was to look at the whole 2026 action so far as a complex top. And the best we had was, as a proxy for a neckline for this pattern, was the 50% Fibonacci line of the November 25 to January 26 move at 12,571. The subplot to this was how we also had a multi-bottom diamond pattern formed between late December 25 to start of March 2026. It was not an easy diamond pattern, though in the end we did see prices drop down below the 50% Fibonacci line at 12,571 and achieve the primary target below, if not the secondary target, harder to reach target further down. So that pattern is now done. Thus we have finished most of one pattern idea and now on the hunt for the next. This, I believe, will center around what the market does at that bright red upper tine, which is where the market wished to go in the past, and now it has arrived, so we wait and see. Okay, so the first new pattern idea has already started to emerge, and that is the November 25 to March 26 bullish Andrews pitchfork, highlighted in dark blue on my daily chart. The market has been today testing the dark blue lower tine, which is currently at 12,785. Looks like it's rejected it and could be on the course for a possible daily key reversal today. What was interesting, and that dark blue lower tine is at 12,785. What is interesting about this test is the market is also testing today the flatlining green short medium moving average below, currently at 12,846. The mauve rising medium moving average, currently 12,776, as well as being close enough to feel the influence of the bright green neckline a little below, currently at 12,734 of the July to September 2024 reverse head and shoulder pattern. Admittedly, this last one is seemingly of limited or even no support. However, all these together could seemingly have eroded the bearish incentive seen over the last 2 to 3 weeks. That being said, if there was ever an opportunity to hit these four supports, then together as they are now would be an ideal time. But I should say that the actual time is running out, as by the end of May, that lower tine crosses the bright red, the dark blue lower tine crosses the bright red middle tine. So summing one of those two is going to have to give way. And I think it'll be sooner than later. I don't think we'll have to wait that long. LME 3-month aluminium. The market's break higher in early January started a move that continues to this day. It also helped at the time to identify a large pattern, not a very well defined pattern, but a large one, and one that had previously been breached on the upside. It is the breach but not yet fully broken April 25 to date, very large, bright green, rising, expanding wedge pattern. and it's currently 30.59 to 35.68, and we're just pushing up over the upper trend line for that. So we have seen yet another week go by, and yet again prices have failed to stabilize over the breached upper green trend line. Really haven't. However, we have seemingly stabilized over the purple middle line, currently at 34.45, of the very large November 2015 to April 2020 bullish Andrews pitchfork. This just left one other pattern to look at, a more shorter term pattern, and one that I spoke about 3 weeks ago. A dark blue late January to mid-March bullish Andrews pitchfork, to show perhaps the actual and more acute immediate bullish angle of attack. And indeed it seems to be doing so, with prices seemingly bouncing up late last week up off the dark blue lower time below. It's currently at 34.63. Though now once again we seem to be constricted topside by that bright green breached and possibly broken upper trend line of the rising expanding wedge pattern, and maybe even a little by the early March highs at 35.46. But we'll see. Further up, in truth, well, we don't have a whole lot. We do have some highs from March 2022 up at 36.60 and again at 37.42, which the former helped cap the market 3 weeks ago, but there is nothing much overhead until the March 2022 high, which is just over the top of my daily chart of 40.73. Now, I did also add 4 weeks ago a 50% projected Fibonacci line up at 37.61 and a 100% projected Fibonacci line at 39.77, with a pair of lesser projected Fibonacci lines at 37.10 and 38.12. But these are unknown quantities right now. LME 3-month lead. Back in mid-January, the market tested up and failed at the 50% Fibonacci line of the May 24 to April 25 move at 20.98. Indeed, I think this 50% Fibonacci line also caused the high seen back in November last year, as well as the earlier this year high. We then pulled lower and in the process created a small January-based head and shoulders top, breaking below the dark blue neckline, currently at 19.78. Now please remember this dark blue neckline. We dropped down in late January and easily reached the primary target, but the market took its own time to get down to the harder secondary target. However, in the process of taking its time, the market did create a bearish cat's ears pattern over February and reached down to the primary and secondary targets for this pattern during March. Interestingly, mainly over just 2 days. We've since overshot on the downside, but in mid-March, prices developed a bullish reversal pattern, a horn bottom over 3 sessions, started with a pull back up. Now this pull upwards then ran into some pieces of resistance that have now become supports. The first piece was fairly static, based around the lesser Fibonacci line at 1939, and is still good as support these last 3 and a bit weeks. It also caused the low back in December last year. This was pierced on the upside 4 weeks ago and fully pushed up through 3 weeks ago. The second is more dynamic, is the green short medium moving average, currently at 1941. The market punched up through this 3 weeks ago and since then has actively used it as a base for further attempts higher. The third is the bright red neckline being tested at the moment, currently at 1968 of the August to December 2024 head and shoulders pattern. This had acted as an attractor during February and more as a resistance these past 3 weeks. A little higher up we have the 50% Fibonacci line at 1971 for the whole of the 2025 move. And then the flatlining mauve medium moving average, which we're testing at the moment, currently at 1970. All of these have acted as effective resistances in recent days, even if they have not as yet been fully tested. In addition to these resistances, the recent mid-March today action has left us with 2 new patterns, both dependent on some of the same details, and one of which seems to be rising to the ascendancy, though they are also being tested as well today. They are a mid-March today ascending expanding wedge pattern, currently 1957 to 2055, and a bull channel, currently 1957 to 2009, and that's for the same period. Neither are highlighted as yet, and both had their common lower uptrend tested last week, and to a certain degree this week, but it seems, so far at least, that the green short medium moving average has somewhat come to their rescue for breach on the common lower downtrend, possibly being a lower uptrend, possibly being repaired or starting to be repaired today. In either case, the ascending expanding wedge pattern seemed more secure early on, but now the bull channel looks the better pattern. This leads to an interesting situation. You see, the lower bull channel line crosses the bright red neckline at the end of this week. And this means that soon, very soon, something will have to give. We have a number of resistances overhead, but the bull channel has been the more dominant pattern here. So it will be interesting to see how this week develops. This brings me to my final point. It's a point I've been making here since the start of 2025 and will continue to do so going forward. At the end of December 2024, we saw the market had created a very large and rare annual key reversal down in LME 3-month lead. Since then, we haven't done that much, and indeed prices are only about $20 or so higher, $30 higher today than they were at the end of 2024. This is not an endorsement of the annual key reversal down, but neither is it a repudiation of it. Hence, I still say, even now with prices where they are, that one should still look at all things looking going forward in this year and beyond, here in this metal, in the shadow of this longer term bearish pattern.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.